Alrighty. Okay, guys. Let's see here. All right, so we're going to be talking about 0DTE. And in the way, I mean, there's a lot of different ways to trade 0DTE, and I've seen I've seen a lot of the people that do that. Some are good and some are not that good, but I do I do a I do a you know a perfect time for the entry of the position, and then I let it go. Okay, and then manage it after that. So with that, let's get started here. Okay. Okay, so what can you expect? I'm going to show you how to make consistent returns monthly based on margin capital at risk using 0DTE high probability trades. Okay, and the reason that they're high probability, and this is going to be for one thing, this is going to be recorded, and I'm going to be sharing it out to you guys as well. Okay, so you can re-see it, and then you can do what you want with it. Okay, all right. So so these are high probability trades, and it's because basically the positions that you put on doesn't have to be perfect, and they don't have to go up and down, and up or down, and it's just based on a range. Okay, and we're going to talk a lot about that. All right. Okay, so so let's get going here. So what will you learn? Number one, how I went from taking 0DTE 3x losses to very few losses in very several months. Okay. Number two, how I identify strikes and strike prices so that you can increase your profitability, and that's the big thing, right? You want to make money. How best to mitigate a trade that is threatened. And I'm going to talk a lot about that, because the reason is because if a trade gets threatened, you can lose a lot of money. And I'm not going to BS you, all right? So, but if it's always in that range, okay, and there's different ways to make sure that happens, okay, and if it doesn't, basically we adjust that trade in a in the right way, okay, so that you can still make profit on those positions. And I'm going to teach you how to do that. All right. Capital requirements to manage in the money and out of the money credit spreads. The best time to widen spreads to gain an edge on the position. And I do want to tell you that I don't do a lot of that anymore. Okay. Because you can get in a lot of trouble by doing that. But there are times that there's a way to do that. Okay. Detailed entry exit stop loss criteria to maintain consistency. Okay. All right. So stay with me to the end. I got a special bonus for you guys. Okay. And you'll like it. So stick with me. All right. So the first thing we're going to talk about is why are you here? You may be interested in learning new strategies that'll take your trading performance to the next level so that you can finally leave that career well behind. Number two, you've read about others making money trading, and you know that you can do it too, but you're just not seeing your account grow fast enough. And number three is you've tried different trading strategies that you thought, okay, this is it, only to discover that it's just not getting you to the place of consistent results. All right. So with a virtual hands, okay, 1, 2, or 3 for one of these. All right. Interested in learning new strategies. Number 2, desire to see your account grow month after month. And 3, find the right strategy that provides consistent trading results. Okay. All right. So with that, any takers? Number 2, Todd, thanks. Samish, thanks. Badri, Marcus, Kim, 3. All right, all 3. Yep. Okay, perfect. Yeah, we all want to be having the right strategy. Okay, and today I'm going to share with you one strategy, basically, okay? And we're going to have another webinar on Thursday as well on monthlies. And I have several other strategies that I do, but and we're gonna talk about that and how to manage those. Okay, so let's get going. All right, so this is my family, my kids, and I was in an MBA program a long time ago, many years ago, and it really helped for getting going in my entrepreneurial way. Okay, all right. So let's talk about mindset, and mindset is very, very, very important. Okay, and one of the things, and I'm going to tell you, I do have a trade alert service. Okay, and you're going to hear about it. Okay, but what happens is that you get in and you try and all of a sudden you take a loss, and then boom, you're gone. You don't want to do that. You want to, and I always say, especially when you're starting out, trade small, trade often, get that expertise inside of you so that you can do very well. And that's what happens. Okay, a lot of people, they give you money, you go through it, and I'm sure that you probably have blown it a lot, and I've done it many times. All right, so we're talking about now mindset, and mindset is that you want to be disciplined in what you do so that you can ride this thing out and make money. Okay, so that's really what you want to do. Becoming the trader that no longer takes large losses but consistently trades according to a proven trade plan that is profitable over time and allowing you to grow your account month over month, right? And that's what you want to do. All right, so let's get down to the nuts and bolts. Let's talk about what is a credit spread, and that's a lot of people have done this. Some people may have not, but let's start from the beginning. Okay, so what is a credit spread? What is that? Okay, a credit spread has a combination, and it's a spread. Okay, between it's called verticals, two verticals, between two puts and two calls, where the put and call that is sold is more expensive than the put or call that is bought. Okay, when you do that, you actually bring in a credit. Okay, you bring in money. Okay, premium. So in this case here, this is a long time ago, but it's the same thing that we do all the time. Okay, you're selling the 450 and you're buying the 440, and you get a credit of 50 cents. 50 cents times the multiplier, which is $500. Okay, so that's what you would get. I'm sorry. Yes, you're getting 50 with one contract. Okay, you're getting $50. Okay, and that's what you get. So from there, you're selling the 40-50 put and buying the 40-40 put for $50. All right. And then the trade is considered a high probability trade because that's what we're going to talk about. Okay. So the reason for that is because you are just like I said, you're not specifically trying to go up or down in the market. You're just trying to go into a range, and then that's where you get your money. Okay. All right. So SPX options have a rate of decay. Okay. So they're always decaying. So options in general always decay as their life span grows lower. Okay. So this is a template here for where you for what happens from these options. Okay, from 68 days to 33 days, the rate of decay is 34%. From 33 days to 5 days, the rate of decay is 57%, and from 5 days to expiration, they expire 100%. Okay. And then with 0DTE, you're basically trading from 9:30 to 4 o'clock, and that's how you get your money. Okay, as long as you're in that range. All right, profitability factors, implied volatility. Implied volatility is something that you can't see, but it's there. When the market, has its gyrations, okay, the implied volatility goes up, and when the market is steady, it's very, very low. Okay, so when you want to play it, when you want to make a trade, ideally, okay, and it's all, it's never ideal, but ideally, you want to have higher volatility, and then when you put on a trade, and then lower volatility as it goes down. And so with 0DTE, most of the time, probably 95% of the time, the volatility is the highest at 9:30 in the morning. Okay, so between 9:30 in the morning, between 9:30 to 9:45, that's really the highest volatility that you have, and that's when I place my trades. And basically, I place them at between 9:30 to about 9:33. Okay, and I'm done with placing my trades. All right. Probability factor number 2 is theta, which is one of the Greeks that measures the rate of decline in the value of the option. Okay, so that's really important, and you want that theta crush to go down, right? And this is basically the same thing with implied volatility. And then the other probability is the market direction. Okay, so if you have, if you're in a market and the market is trending either up or down, you want to be in that trend. Okay, where the market is, where the market's going, not against you. Okay, so you always want to try that. All right, let's look at the guidelines and risk management. Always trade with a plan. Okay, so before you even touch the portfolio, right, you want to get in there and really understand what that plan is. Okay, determine what the max and risk reward before entering that trade. Trade no more than 20% credit margin at risk. So basically, if you have a $10,000 account, you don't want to have a risk lower or higher than 20%. Okay, and that's because you want to trade another day. Okay, don't allow more than 2% loss based on your trading capital. A lot of traders use 1% trade. 2% is fine, as long as you're managing with 20%. Okay. For highly trending markets, position your trades to follow the trend, as I just mentioned, and size your trades to ensure that emotions are not part of the decision-making process. Again, trade small, trade often, especially if you're learning. Okay, pre-market routine. This is something that I've done for years and years. I look at areas of support and resistance where it's going to be. I use the dollar broadly, okay, and treasuries as well, just where, because the dollar forces you to constrain because of because there's cross currents with that, right, and it blocks with it blocks with the dollar. Okay, treasury is basically the same thing. When you're looking at futures as well, most of the time, especially overnight, you can see the trend, right, with that, and depending on where the market is, if the market goes up early and then wants to recover back, right, you have to figure out how that works. So it's a little more it's a little harder to do that when you're trading, especially futures, and you got to have the right position to do well. Review the VIX level, and just understand where that volatility is. All right, so before I trade, basically I take my positions and I figure out where I can place them, right? So it's I'm right there ready to go, when you place those. Okay, I look at the bear and the bull credit positions and figure out how best to trade during those times. Okay, so you're already ready to put that position on, and that's what I do. So a lot of people say, oh, okay, let's wait till the market moves, okay, and let's wait, and takes a position and goes. Well, that's fine. That's fine, and it's a great way to do it, as long as you're in the right place, right? So for me, I place both positions, and allow the implied volatility to do its thing. Okay, and that's really the way that I trade. A lot of people trade differently, but this has worked very, very well for me for many years. Okay, post-market routine. Determine if rules were broken and why. Determine if risk was within acceptable levels, and this is the discipline part. Okay, guys. Determine if losses were within acceptable ranges, and determine if tweaks or adjustments to your trading plan is necessary, and update your journal if you have one, and you should, with your findings. All right, so let's talk about SPX and days to expiration. Regulatory thing that they have ever had, okay? Because you can trade basically anything other than SPX, and you get dinged for it. So you have to be very, very careful with it, okay? So the thing is that if you're buying and selling, or selling and buying on the same day, you can actually lose your ability to trade for 3 months, okay? So as long as you have a $25,000 account, you're fine. If you're under that, you have to be very careful, or else you can lose your ability to trade, and and they'll let you go, but you'll have to go to another brokerage. Okay, so so just be careful with that. And I've heard that it is going away. Thank God. There is ways, under 25,000 that you can do it with. So have 2 accounts. Trade one trade one day, one trade on another. You can do that, or you can you can manage trades for wider iron condors. Excuse me. And then but they will let you trade because you can trade three trades between a 5-day period, and you'll be okay. Okay. So you have to make sure. And sometimes I'll put on a trade and I'll take it off just because I made it, I made an error, but you'll get dinged for that as well. there's no no compensation there. All right, so let's talk about the guidelines here. So when I enter a trade, I enter it between 1 to 10 minutes. Okay, and sometimes, very rarely, do I go to 10 minutes. So sometimes I'm pretty confident where the market's going to go, at a certain time, and I'll wait for that trade to come in. And that's really one of the only places, or one of the only things that I do in order to wait a little bit to get into that trade. Normally, again, I go in from 9:30 to 9:33, and I'm already in the market. Okay, so I use a delta between 5 to 6 on the premium, and 45 to 70 should be targeted there. And actually, I haven't looked at that for a long time, but it works. Okay, it works. All right. So wider spreads provides greater distance from the market, and we'll talk a lot more about that, and where the best place to be in terms of widening positions. Okay, so if you don't have a $25,000 account, it's easy to get out of the market between basically 9:30 to about 2 o'clock or 1:30, around there. You'll be able to close your position for 10 cents if you put on the position, a position for around 55 or 60 cents. Okay. Closing the short strike, that's one way to do it as well. And that way, the risk is pretty much gone, if you do that. By closing the short strike and then leaving the long strike on. And also, don't allow a profitable trade to turn into a non-profitable trade. If you have, if you're good and you have an account that's over 25,000, the best thing to do is just to close the trade, take the money, and go. Okay. So when I do it, I basically trade, because we have a lot of people who don't have 25,000. So I trade and let it expire. Okay, most of the time. All right. So when you're adjusting a trade, I roll most of the times with the put side, and the call side, depending on where the market is. If it gets very high and close to the money, I'll roll that trade. With the put side, I generally let it go, and very, very rarely will the market go low, but it's happened. It's happened to me. But again, you can adjust these trades, and I'll talk about that. Okay, when you have a close bear spread, the best thing to do, if you're not rolling it, you can close that trade for 2x or 3x of the credit that you put on. So if you put on a 50 cent credit, your stop loss would be $1.50. Okay, that's just an example. So it's different ways to do it, and a lot of people do it differently. So I'm just giving you what I know out there. All right, so let's talk about managing trades, and this is one of the things that's really, really important, because it's easy to put on a trade and let it go, but once it gets threatened, that's really where your expertise needs to come in and understand what to do and how to do it. Okay, and so we're going to talk about that, and I'm sure that you guys have had experiences where that's happened, right? Okay. All right. So this is a volatility, for 22 on the VIX, and it shows where the positions go. And this is let me see. This is a 5 wide, 10 wide, and 15 wide positions. And you can see here where the 5 wide is basically 1% of the 1% of the excuse me, where that position is going to be. Okay, and then 1.2 side, 1.2% is on the put side. So the green is on the um, the call, and the put is on the is on the put. Okay. All right. So and these are great for, you know, one thing for 5 wides is that you can really roll those things way out. Okay, if it's threatened. Okay, so that's one advantage of using 5 wides. All right, so 10 wides is really what I use pretty much all the time. Okay, is what I use. So you get 1.2% and 1.7% for the 10 wides. Okay, and so if you can see here, once you get to 15 and even 20, there's a diminishing return on that. Okay, and so I've just found out that that 10 wide is really the best one for me that works very well. Okay, so if you look at the next slide here, you can see that again it's just the diminishing return for these positions here. And I've heard people that that do 50 wide and stuff like that, but it's not worth it. So that's just me, and I'm just telling you that. Okay. Here with the VIX 27, it's quite a bit more. So if you look back here, see we have 361. Oh wait, that's 27. Let me see here. Is that still the 27? No, it's 22. So 22 is here, and 27 goes a lot higher. And again, it's just not, with 15 and 20, it's just not worth it. All right, so let's go with real positions here, and what happens. Okay, so I have a lot of different templates here for looking at these positions, and these are threatened positions. Okay. All right. So and again, this is a long time ago, but this is the same thing for any time frame, unless SPX changes or something. Okay. All right. So here we got a one vertical. Now it's threatened, which is 2.45%, right? So the market price is 35.80, and you're five points away from that position. Okay. Now what you want to do at this time is roll that trade, and so there's different ways to do it. And so in this case here, we left the strikes at the same place. Okay. So and we're moving this position excuse me, position from let's see, 12/22 to 11. Yeah, so 1 day. All right, so we moved it 1 day, and we left the strikes at the same time, at the same place. So here, same strikes for $1.75 credit. Okay, now we're going to go here, and this time, let's see what we do. Market 41.42, and this is for the bear side, for the call side. Okay, and here you get $1.15 for that position, and that's how it works. So you get a less of a credit, for calls. That's that's how it always is, pretty much. Okay, now we have a bull spread rolled down. Instead, now we rolled it down. So we went from that 175 position now to 35 cents. Okay, so we rolled it down 25 nice strikes positions here, and and we get a 35-cent credit. Okay. So now we have a 35-cent credit, rolled down 25 points. And so you're getting away a little, you're getting 25 points down to get away from that, that threatened position. Okay, now we roll down the position next day. And this is a bear spread, okay? So now we have rolled down next day, and we have $1.15. Yes, with 15-cent spread to this. Okay. So 15 points, you get a 0.30 credit, and it's less than the bull side. Sorry, the bear side. Okay. So now we have a roll down widened trade next day. So this gets pretty, this takes you away from that threatened position quite a bit. Okay. So this is, you're in that 245, and now you want to get a credit on this, right? And you get, let me see how much this was. It's 45 points down, okay, with a 15-cent credit. And these threatened trades are easy, nice. You get away from it, okay. But you're going to see now when when you get in the money, and that's when it really gets bad. All right, here again, you get the bear spread roll down, widened, and you have a 35-cent credit with 25 points, okay? Okay. Now we're gonna roll out 2 days out, same strikes, and you get $2.15 here. Let me see. I do that right. 2 days out. One gives you a 40-cent credit. Yes. Okay. All right, now we have bull spread, rolled down, widened 2 days. In here, you really get far from the money here. So you get a widening position gives you 60 points at 35 cents. But keep in mind, when you widen those spreads, it can get really messy because you might not have enough to do it. Okay. All right. All right. Now we have a bull spread, roll down, widen 2 days. Okay. Let's see. Out of the money. Okay, it's still out of the money. All right. 2 days, 15-cent credit, and basically 100 points out. Is that right? Yes, 100 points out. So that's really, really far away. Really far away. Okay, now we have a in the money. Okay, so now we're in the money. So this is 10 cents out of the money, right? And now you have a $6.10 debit. And to roll that, you won't be able to do it with a credit. Okay, you'll get a debit on this. So you have in the money credit spread, which always ends up costing you a lot of money. And that's what happens. All right, so now we have this 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 position here. So now we want to roll it down, and it's going to cost you $3.30. That's a debit. Okay. Very expensive to roll, especially when you're in 0 DTE. If you're in 7 DTE, it's a little bit easier. You roll it out, but now you're going up, right up to the fence there. Okay. And so here we go down, so we widen it, and so we get 0 here. Okay. But it's only 15 cents. Right? Is it 15 cents? Yeah, 15 cents downside. That's it. That's all you get. All right. So I just wanted to share with you with that. Now, when I have a threatened trade, the best thing what I do for that is that I will roll that trade out. Okay. And I'll roll it out maybe a day or 2 days, or sometimes a little bit more, depending on where the market is. And and then I will. So let's say the market moved up, and I roll it out. And what I do is I'll take that call that's rolled out, and I will put on a put spread. Okay. To what you put out a put spread to finance that roll. Okay. And I can tell you it works very, very well. And the thing is that it takes a little bit of time, because sometimes you'll have to roll that trade a couple times in order to get that placement that's in that range again. Okay. But this, I'm telling you, this works every single time. As long as you are, as long as you're close to the money, or not in the money. Okay. You can put on those positions and just manage those over and over again, and then eventually you will get profitable on those positions. Okay. And this is how I do it. This is the way that I manage these trades. Okay. All right. All right. So let me give you an example of a couple of these trades. So let's see what happened here. Okay. So I put on a trade, and it's 4170, 4180, 60. So you get the put and the call, okay, on these, right? And you can see here that the market just went down, quite a bit right after that. Okay. And so what happened? And this was a while ago. So I widened the spread. You see it, 15 cents. And I still got the market went down quite a bit, and I still got a 40-cent credit on that. Next day, the position expired worthless, and nice, it was gone. Okay. So here's another scenario. Put on a call and a put. Okay. And then we had a threatened trade. It was widened. Okay. Okay. And this is what happened. So that trade went. We just went, right? We just went that. We got 60 cents. Rolled that trade and got 30 cents on it. Right. Got a new position. So this is what I'm talking about, right? So we got a put spread now, or I'm sorry, we got a new position. Let's see here. Okay, we're still rolling it. Okay, we're still rolling this trade. Let's see, put, yep. Okay, in this case here, new position, put. Rolled it again for 25. Okay. Okay, we got $1.30 on it. And then closed it for $1.20. Now this is what I used to do, okay? But what I do now is I put on counter trades, right? That gives me the financing to do these trades, and I don't have to widen the trades anymore, okay? All right. Let me see if okay, I don't see position here. Okay. I don't know if you can see the slide there. Okay. All right. So this is the performance that I had, and this is my small account. This is the performance that I had from March to August of this year. Okay. And so so I started with a $25,000 account, and from March until August, the year to date is 28,000, right? But I'm trading now. I'm trading monthlies. I'm trading 0DTEs, and I trade 0DTEs daily. Okay. With 7DTEs, I trade every 2 or every 3 days, pretty much, and monthlies I trade monthlies, right? With those. The amount that I'm using 10 wide and 10 contracts for my monthlies, and I use 5 contracts for 7DTE, and I use 10 contracts for 0DTE daily. All right, and that's how I trade. And like today, right, the market went up, and we have other positions in there, but I use those, and I adjust those trades continuously so that I'm profitable. Okay, and so this is basically how it works, and it works really, really well. All right, so for those of you who want to see my trades, I post these every Monday, Wednesday, and Friday. Okay, and I share my trades, what I have. So you'll see the adjustments. You'll see everything on these trades, and I do this Monday, Wednesday, and Friday. Okay. All right. So the question is, would you like to follow these trades and learn how to use these short-term strategies? Even monthlies are pretty short-term strategies. And consistently profitable, of course, right? It works. And so we talked about interested in learning new strategies, desire to see your account grow month after month, and find the right strategies that's giving you consistent results, right? Everyone wants to do that, right? So the question is it time to break those barriers? Do you want to get out and make some money? And it's not easy. I mean, it takes work. Okay, so if you keep doing what you're doing and hope that one day it's going to stick, it's just not. It's just not going to work. But if you finally want to take steps that get you to the place that you want, that you want things to work, this is what you need. Okay, no quit attitude, commitment, discipline, and having an edge, right? And I'm telling you, when I started just with monthlies, right? And I had a career, and I had to, manage that career. But I was doing this, for like 10 years, trading just with monthlies, and it works. I mean, I had a $70,000 account. It went up to $400,000 over that 10-year period, and things worked very, very well. Okay, so the question is, do you want to have that success, right? So I put this together 6 years ago, I've been doing this, and it's been a very nice ride, right? So our trade alerts here, we use Telegram, and what we do here is we have live chats, and we recently lowered our prices, okay? And we now have three plans, right? 79 plan, 109 plan, and 199 plan. So the Telegram, there's communication between each of us, right? But our alerts are specific just for one-way communication, to make sure that anyone who puts on the trade can see it, and there's no way around it. Okay. Right. So we have a lot of trader success stories, and a lot of these guys aren't here anymore just because they left and they're doing their own thing. And I just want to say that if you subscribe for 1 month and lose money by following my trades, I will refund your subscription by $1.25. Okay. So let me give you the, here is the subscription. Let me give you the offer here. Let me get it real quick. It's not real quick. 1 second. Let's get mixed up with this one. All right. Let's see, I think I need to go up here. 1 second. Wait a second. Here, 1 second. Where is the offer? Offer. There it is. Saved. We got it now. Publish. I always mix that up. Okay. So now you have the offer. And we are live already. Normally we do our thing with every 3 months we close the service, and the reason we do that is because because we want to focus on our traders, right? And so right now, right, this is the marketing part of me and showing you what we can do here with you. And once we close the service, we close it for 3 months, and then we go back again and do it. And so so you have a chance here to get $20 for life, $20 off for life, and have a great way to trade. And we have great people in the group as well. And so this way we can excuse me, we can share this with everyone, and people are making money. Okay. All right. So let's see here what we got left. All right. If this is for you, if you want to learn a step-by-step strategy that gives you income that goes up and down, if you want to finally break the series of losses and account drains, this is for you. Okay. This can allow you to make consistent returns over and over again, right? So what you get is you have $20 off for life, and we are currently open at this time. By next weekend, we will be closed. All right, and then you have to wait for 3 days, 3 months. We have professional traders that actually trade for a living. Okay, several traders that are in our group that do that, and they trade their own stuff, plus the things that we do. and they're always constantly sharing information. Okay, so we have a trading education channel filled with content. We have automated signals within seconds of the trade, not seconds, but it's 15, 30 seconds to get the trade. You get a trade entry fill price, a price target, adjustments for those trades, and my guarantee that you will make money, right? All right, now, if there's, let's see what we got it now. All right, we have, if you guys have questions, all right. Oh, the screen's not good, huh? The screen's, what happened there? Jeez, let me go back here 1 second. I didn't see that. No, it's full screen. I don't want that. Okay, so you guys are not seeing the screen then, right? Let's see here. Okay. Okay, good. All right. Let me see. All right. So, okay, so that's what we have. So do you have any questions? Trading credit spreads, trading regular. Correct, okay. Like trading regular credit spreads except for the shorter term. Yes, exactly. Do you offer reliable support for members? Yes. We have a group that, me included, that we share information and always answer your questions. Would like to only swing trading to avoid pattern trading. That's good. And basically we do swing trading. I mean, that's basically what I do. Okay. The offer is 3 hours from now, and you can get in during that time. Can you show us an example of an alert? Oh, okay, thought I saw that on the 1 second. Let me go back here. Oops. It's not what I wanted to do. Okay, 1 second here. You asked, let me see here. Let's see, to understand enter. Yeah, the video will be out there. How long is the offer? Okay. Example of alert. Yeah, that's what I was doing. Okay, 1 second. Let me get down there real quick. 1 second. Let's see here. Okay, now we got it. One second. Okay. All right. Okay, so these are alerts right here. So if you see here, Sell to open. Oops. Okay. These are all the alerts here that come in. Okay. And these are open positions that we share, and you can see where these are going. So these some of these are using 3 contracts, 1 contracts, but these are the alerts that you would see. Yeah, we have an education channel that you get when you join. Okay, and you can use that for education, basically. Okay. You don't have to have a coupon, but as long as you get in for in 3 hours, you're fine. I'll miss the pricing. Let's see here. I think I have that. Let me put that on. Here it is. There's your pricing. Yes, with futures with Michael, yeah, that's the highest paid plan that we have. He's very, very good at it, at what he does. And then roll as either trade is threatened. Yes, either. Let me see, just confirming, James. Just confirming I understand the strategy is both a put and call spread. Yes, beginning at this trade day. And then roll the either trade. That's correct. Yep, you got it. Okay. All right, guys. I think we have it. Hopefully this was of value to you, and we will see you soon. All right. Thanks. Have a great day.